Someone who I've known for a while, Wesley Deaver, brother. We threw you into the deep end.
Yeah.
And we were like, Wes, this is going to be your job, man. Like, you have to take what you know, which is nothing, and make it something.
I had some health concerns over the past few years, so it is something that I take personally to make sure that people are understanding what they're getting into.
Health insurance is health insurance. Like, well, sure, if you treat it that way. But if you treat it like a tool, then you can do something with it that's more creative than the guy down the street.
It's an interesting time in the market right now because there are a couple main players who are trying to become more competitive in the space. We're seeing them be 10 to 15% more cost effective than the rest.
Which is a huge, I mean, nothing's going down right now.
Sure.
Everybody should be looking for that setup. There's a three-letter company, right? I'll just say it's
They are a payroll company that happens to do benefits. They're not insurance professionals, and they shouldn't be expected to be. Really like the silent employees.
Wesley was Harry Potter in that regard.
He's the kid in the cupboard under the stairs.
Well, everyone, another episode of the Risky Assets podcast coming at you. We have I think, a cool one today.
It's going to be fun.
Someone who I've known for a while. Over here to my right is Wesley Deaver, brother. Yes. Really exciting for us to kind of just talk shop and what you do for Greyhawk. And obviously, we've hung out a bit. We spent a lot of time together. I think I see you like 6 or 7 days a week at this point. So,
do you guys go anywhere without each other anymore?
No,
That's the
pretty
question.
much.
That's the
Not
question
really.
that I always ask.
yeah. It's me and my wife or me and Wesley. Like it's But Wes has been with us for almost 2 years now, basically.
Yeah.
And obviously does a lot for us. So we just wanted to get an introduction to you and obviously what you do for Greyhawk and kind of talk about your past history. So like, how did you get here? What was the story? What got you all your previous jobs?
Yeah, I guess the experience that kind of led to Greyhawk is really just being kind of loosely in insurance for the past 8 years. So started at a body shop, and that really was just handling claims as a service advisor.
Sure.
So, getting to see the back end side of the claims process and kind of facilitating that was really interesting. And then really switching over to Progressive as an auto appraiser for them, that gave me more relevant insurance experience where I saw how that kind of operated. So being on that side definitely changed the perspective a little bit. But meanwhile, this is all culminating in just a lot of insurance experience.
Totally.
So when the opportunity presented itself, it just made sense to really jump on ship and work with you guys. Been doing that for the past 2 years with both of you and the rest of the team.
Yeah, really like the silent employee, right? Because like you were with us from the beginning.
Yeah.
But like all the pictures was like you and I and Seth. Because you were, working a full-time job and then working and doing odd hours for us when you could, contributing and giving your talents in that way. And so, but it was like, like you were there and then you weren't there, but like you were there the whole time. So it's always this funny thing to be like, no, actually 4 of us started Greyhawk.
Yeah, but Wesley was Harry Potter in that regard. Like he was just put him over there.
He's the kid in the cupboard under the stairs.
But even in that time, there was things about auto claims that I was like, we're stuck here. And you were like, no, you do this, and you can ask for that. I'm like, what? You had back-end knowledge of like all the things that you could advocate for clients for, which is really cool.
Yeah, the tips and tricks were just really helpful. Jesse, who was on the podcast, totaled his car, and we got him like $5,000 extra on his settlement. So really just the weird knowledge of claims that I have has been really useful for our auto and home clients.
Yeah. Totally. Yeah. Well, that's and that was 2 years ago you started Greyhawk. Initially when you started, very much like we threw you into the deep end.
Yeah.
We had a health insurance book where we were like, well, we can't do it.
Right.
So
I knew a little bit.
Yeah,
I knew enough to be dangerous.
Yeah. And I didn't.
Yeah.
I knew jack squat about that world. And we were like, Wes, this is going to be your job, man. Like you have to take what you know, which is nothing, and make it something.
Right.
And these were like substantial clients of ours. Like not just, these are the small accounts. These were our big boys.
Yeah. And what we knew from the previous experience when we worked for that other place was, it was like, we know that this isn't being done
efficiently, for sure.
And the best that it could be done. We knew that there were things out there that could be done better for clients. There were ways of streamlining things, making things more accurate. We found a lot of inaccuracies for our clients as well.
Doing things manually involves mistakes.
Yeah. And just, systems where you're keying and rekeying things and doing paper enrollments. And we're going to get into all of those things today. But we knew that it wasn't right. We knew that it could be done better.
So we gave Wesley this like, hey, we want to use all these systems. We want to use all these tech platforms. What was it like day one when you're like, okay, got to figure it all out? How was that?
It was a little overwhelming.
Yeah.
It was, I don't know, parts of it were hard. Parts of it were really convenient because you guys had the technology in front of me. I just had to become very familiar with it and how to make the most of the systems. Obviously, dealing with people and trying to get them in a good place was, I don't know, comfortable. I just wanted to help people.
Yeah.
But how do I do that in the most efficient way possible and not screw up people's health insurance? You know, that was a scary part of it, but really something that I wanted to tackle. And yeah, turned out to be a good thing for everyone.
Mm-hmm. Yeah, really good thing. And then you were selling on the side, so to speak, right? You were doing a lot of your auto body because obviously you came from that world, so you could speak to those guys at a high level.
Yeah, that was my previous network of really, you know, I would see 3 to 4 different body shops every single day. So that was just a really good network for me to tap into of owners that trusted me and knew I was reputable. And however I could work with them, save them money, you know, help them with their insurance. It just made logical sense for them to work with me. So yeah, that was a huge market for me.
When did it get comfy? When did you feel like, okay, like I at least have a grasp of how everything works, and maybe I don't have all the answers, but at least you were comfy? Yeah,
I would probably say after going through last year's open enrollment cycle, that really was just doing it all on my own. Felt like I didn't really have a ton of questions. And that was a lot of good experience for me to just do it on my own, try and figure some of that stuff out. And really after that, that kind of felt like where I started to settle in and really understand the processes of health insurance and how a renewal cycle would look like for a business.
Yeah. And you and I have said from the beginning that we are very blessed to have Wesley.
Oh, yeah.
I've said it for a lot of years and in front of a lot of people that Wes is wise beyond his years, and that his ability to talk to people, to study something, to speak intelligently about it is a huge asset to our business in general. So we were really comfortable knowing that he would step into it, that he would take ownership of it, that he would learn it, and has really done an excellent job.
Yeah, when those 2 neurons in his brain hit, they do good.
They work together well.
No, but in all seriousness, again, this is my brother, so I gotta stop. But we have so much confidence in what he was going to be able to do. So it's worked out really well. And obviously, even from a production side now, like that's really starting to go. You're really streamlined on the health insurance side. You know, we're talking big picture now of what the next couple of years looks like to grow the health insurance side of the business. But outside of that, you know, part of what we wanted to do was talk about from like an employer, like an entrepreneur, why this stuff matters. Because I think sometimes payroll is like, oh, payroll's payroll. And I'm like, if you treat it like that, it is. Yep. Health insurance is health insurance. I'm like, well, sure, if you treat it that way. But if you treat it like a tool that's meant to be used for the benefit of your employees, then you can do something with it that's more creative than the guy down the street.
Yeah.
So we believe in all the tech platforms. We want to make it as fail-proof as possible. We want to take so much work off of our customers' desks that all of our systems are doing. We pay a lot of money to do that. So from your perspective, right, you're doing it day in and day out. Like, what are the big parts of this business? Why is it important for employers to have it and like do it at a level where we say it's efficient, effective, all those good things?
Yeah, I would say the main, big picture item is just employee retention. If you're a successful employer, you're going to want to understand that keeping your best employees is part of the business. And really, however you can most effectively do that, we feel that, offering a competitive culture of success and benefits is a huge part of that. So, statistically, the retention would show that if you offer benefits, you're more likely to keep the employees. So that's a huge part of it. Now, as far as what the employer contributes, that's going to be a totally different part of each individual business and what they can afford, how generous they're willing to be. But really, it's a huge asset for the employees to feel cared for and obviously take the financial burden off of them.
Yeah, we always talk about freeing up headspace. Like, I want my employees to worry about working and not like, crap, where am I going to get this money to pay for my kids, injury or whatever. And like, from a real perspective, like, we have the responsibility of making sure payroll clears so people can pay their mortgages and people can pay all that stuff. We also want to be sure to take care of those people for health insurance. They have families, and it's really important. And that frees their mind up to just do work and not have to worry about it. And hopefully that means they're comfortable with being with their current employer.
Yeah.
Yeah, no doubt about it. If you want to attract good talent, the benefits platform is a huge part of that,
part of it.
right? I mean, if you're offering somebody $80,000 a year without benefits, and then the guy down the street for the exact same job is offering $80,000 a year with benefits, who's going to win, right? And so,
especially as you get older,
yeah,
you know, it's like, wow, what was $300 is now $1,000. You know, and it changes. So like it's completely a retention and it's an attraction tool.
Yeah, and I had a mentor just recently tell me that like as you're looking at growing your business and incentivizing your employees more, increase your benefits platform. It's not always just about giving pay increases. He's like, the more that those employees become endeared to your business because you're caring for them by offering more benefits, the more they're going to want to stay. So it's not just attraction, it's retention as well. It's a big part of it.
From an employee standpoint too, right? It's great for them. Employer standpoint, it's actually cheaper for me to offer more benefits than more pay because there's payroll taxes, there's all those things that come in. And it's like, hey, I want to be generous. Here's a great way we can do it. And there is some incentive for the employer to do that, right?
Yeah.
So it does work out for everybody.
And it makes us feel good. I mean, I don't like to focus so much on how things feel, but as employers, like when you see, you know, an employee who has a who has a family having a baby, and it's like, you know, those hospital bills are huge. And you know that they're using a benefits platform that your company is providing. It's like we're doing something really good here, something really special.
And
for
you
people.
see that all the time with enrollments or people starting. Like they have all these things coming up. You know it weighs on those people. Yeah. And the better the plan, the less it weighs on them.
Definitely. Yeah. I mean, if they're able to understand that my costs are capped by this copay or this deductible, it just gives you the peace of mind to know, okay, if I have to go to the hospital, I'm not going to be stuck in debt for years. You know, I have the peace of mind to know that me and my family will be taken care of.
And to that point, you do all the onboardings, whether it's in person, whether it's Zoom, whatever, bilingual, by the way.
Yeah.
So
you wouldn't know it by looking at it.
Yeah. Well, him much more than me. Like I can speak Spanish enough, but like him and my sister specifically do really well with Spanish. And so we were like, wow, this is a great benefit to us because look, we have contractors, we have manufacturers, we have all kinds of stuff. Like it's really important in Southern California to have that ability. And whenever we hear you talking, it's for sure a lot of the same things, but it's because those things matter. What is my out of pocket? How big is this? Where's my doctor? You know, and those are things, if you can make the employee feel comfortable, that is a benefit to the employer.
Yeah.
Because someone is doing that job that either your HR person would be doing or you're doing. We at Greyhawk take that off of people's plates, which is really helpful. And we're the insurance people. We should.
Yeah,
you know?
Absolutely. So Wes, when we're thinking about, you know, a client who's looking at buying health insurance for the first time, and they're like, I don't even know if I can afford this. What are sort of the first steps that you walk them through, you know, as you're going through that process?
Yeah, it's really just outlining what their minimum contribution is, which I think is probably one of the bigger misconceptions, is that as an employer, I think you can get the idea that you need to pay for all of it. That you need to pay for 100% of the employee's costs for the health insurance. We're really here in California, the minimum that you have to pay is 50% off of a base plan. So whether that's a silver HMO or, you know, we can get into the nitty gritty, but there are different alternatives to where you're not spending an arm and a leg for all of the employees.
Yeah, so for people like that, your floor can be really low to get in, and then you can still offer some ballin' plans.
Yeah,
where
absolutely.
it's like, if people want to buy up for it, they have a PPO need, they have a need for a specialist. You can still offer it. It's still based off of half of that base plan, which we do that for so many people with Cal Choice because it does make a lot of sense. Shoot, we have that.
It's what we have
it's
personally.
It's what most of the time I think people should do. But you know,
so you would say not something that employers really need to fear because there is a lot of flexibility in it.
Yeah, definitely. If it's something that you wanted to introduce, it's not this massive undertaking where you're spending a ton of money. You know, it can be if you want to be generous and pay a lot of the employer's contributions. But no, it can be a lot more simple, and you know, there's a variety of options that we can walk you through, like a Cal Choice, where the employees have tons of options, and you know, you're just paying off of a fixed amount that makes sense for you in the business.
Yeah, people love Kaiser, right? So that's another big part of it. Is you can add Kaiser into that. People with young families love that setup, which again is completely understandable. So it offers a lot of variety. Well, obviously, there's also things that we do that make it easy for the employer, where it's like, we have all these tech platforms to make it simple for them to onboard it. There's not this huge lift on top of the expense of like all this admin work, which we pride ourselves on being really easy to work with in that regard.
Well, you met with sorry to interrupt, you met with a employer today who just last year with another broker was doing paper enrollments.
Yeah, they were telling us this morning that the process was amazing because we were doing everything online through our system. And they were telling me last year it was all paper enrollments. They had to print it out, fill it out, scan it back. And we missed this form, we didn't have this, and it was just
reprint.
It was a headache.
Yeah. It gives me the chills. Yeah, I just
Neanderthals, bro. I don't.
can't.
And we've talked about this a lot on the podcast that the broker world is very antiquated.
Very.
And that things that other businesses take for granted, like electronic onboarding of clients and sending e-signature stuff, where that's common practice in every other industry, we're really outliers at Greyhawk that we are advancing that front in the insurance brokerage world. That just not a lot of people do it. It's shocking.
It's shocking. Even the employer paperwork, we discovered with one of the systems that we have, we do electronic applications. We could basically take 4 applications for CalChoice,
Right.
upload them to our system, and since all of them ask business name, address, phone number, you just put it once and it populates the answers into all the rest of it. So instead of doing 4 applications on its own, you're basically doing like 1.25 to 1.5 because of the duplication. And that, again, it's a huge time saver. You're getting back time for the employer to go do something that to them is revenue generating or taking care of their business. And then we're taking care of all the admin stuff. It's phenomenal. I think we do a great job on that.
Yeah.
one.
And I think that, even just for the average listener, listening to the show, they're like, well, that can't be that big of a deal. It really is. It's a big deal, and just not a lot of brokerage shops do it.
Wait till you print out a bunch of forms
Yeah,
like that. It's a
It's
lot.
a substantial amount of paperwork. So when they're doing it online over and over and over again, you lump in medical, dental, vision, any ancillary benefits that they want to add, it becomes a lot of paperwork.
Another form. Yeah, you just keep stacking them up. Yeah, it's insane. We don't deal with it, but whenever I hear paper apps still, I'm like, wow.
Yeah.
But it's way more
Why are
prevalent
we
than you
doing
think.
that? It's just, surprising. So I think that for a while too, employers in California, and some still do this, the health reimbursement, option that they'll tell employees, hey, instead of doing a group benefit plan, we're going to create a reimbursement for you in your paycheck. There's a good way to do that, and there's a bad way to do that.
Yeah.
And I think it's important for us to identify that, like, employers, if you're doing that, it needs to be on a tax-free, reimbursable basis. Like, if you're not going to jump into the group space and you're like, I've got 2 employees, I need to keep this minimal. My employees are with the health exchange. We want to make this easy. That needs to not be a taxable event. Shouldn't be like a bi-monthly stipend into their account. It needs to be reimbursement based. That can be their premiums. That can be their copays. It can be a number of different things. All that to say, like, we want you to know that we're creative on our side, that we're not just trying to slam a product down your throat, but it's like,
Totally.
hey, there's a lot of options here.
And you can do a 2-person group where you just set something up like that with a policy, right?
Yeah, at this point,
So it's like they almost don't even make sense anymore.
it's easy enough. Blue Shield will do a 1-person group. So
So it's like you can create that and still be above board, doing the right thing, pulling it out of their paycheck just through a premium only plan, and you're good to go. You don't have to do that stuff anymore.
Yep.
So again, that's where we feel like we're a huge benefit, and like obviously he figured that out and relayed that to us. But it's like that is a way to really give someone to go, oh, I don't have to do this. Like, what happens at tax time? Because if you do it wrong, they go, that's income.
Yeah.
You have to pay payroll taxes on. You have to,
So then that $400 reimbursement that you're giving to your employee, if it's in the form of a stipend, it's not, it's not $400. It's like $360. And then they're getting taxed on it. So
exactly.
So Wes, you've seen the small group space. You've seen the reimbursement side. Talk about PEOs. And I think that all 3 of us could talk on it a little bit, but like, what's the value to a PEO for clients that are thinking about, benefits and maybe some HR and some payroll stuff?
Yeah, I think we mainly see it for the health insurance where there's a low participation in the group. So if they're not meeting certain requirements, it's a lot easier for them to get access to the healthcare on the PEO side. So whether it's a tough to place industry or there's just not a lot of employees that are enrolling in the coverage, the PEO is going to make a lot of sense for them to have that large group that they're essentially bundling into. And then you get the HR, the safety training, some of the other services that you wouldn't otherwise get. And I think for a small business, that can help you with some of the scale that you're not normally getting, to have those resources since you're, just starting up, so to speak.
We had a PEO to start when we were at Greyhawk, and in concept, it was really great. The rates were good. Payroll was, for us, good enough, so to speak. The health insurance really drives that.
Yeah.
Unless you're having really bad claims history and then you go to like a BBSI for workers' comp or something where it's like that's the main purpose of it. But, you know, from a real perspective, that large group rate is really helpful.
Yeah, the composite rate helps.
Yeah.
The cost side of it, though, for us, we carved our commission out. So we were paying less than, you know, than the normal person would. The fees can really be exorbitant. On PEO side. And so the task that we often have on our side is like unwinding all of that. And they hide those fees really well in those systems to where, you know, they're going like, well, how much does this even really cost me? It can't be that much. And then you figure out how to unwind it and show them like, oh, it's based off of a percentage. It's not a flat rate and it's costing them a lot.
Yeah. I mean, there's a 3-letter company, right? I'll just say it's ADP. But, you know, when you are in their PEO, like a lot of people in our world, so look, they're payroll companies. They shouldn't be doing your comp. They really shouldn't be doing your benefits. They don't have the resources and the wherewithal to do a good job. They'll do a job, not a good job of it.
Yep.
But then when you say, hey, how much does this cost for comp? Oh, this is your total cost.
Yeah.
No, but what's my comp? This is your total cost.
Yep.
Well, how much are you charging me in fees? Here's your total cost. Like they don't want to give you the answer. That should give you a lot of red flags.
Yep.
That like they're hiding some stuff in there, and it's expensive. And look, you've had other clients. I think of what's the accounting firm that was with them? It was like I really would love to leave Arxis. You know, and you're like for that same reason, they're really difficult to deal with.
Yeah.
I think there's a time and a place. I think they'll get a little bit better at actually dealing with the cost and the hiddenness of it.
Yeah.
But right now, not my favorite options, but there's definitely times when it's the right play.
Yeah, and I worked for ADP. I sold that product. No, who would ever work for ADP? I would never do such a thing. But it is important to remember, and we've said this before on the show, that they are a payroll company that happens to do workers' comp or that happens to do benefits. So in those times when there's claims or when there's heavy questions about benefits and what's covered and those things, you're not getting great answers for those questions. We were with a gentleman last night who was telling us, I hate using ADP Total Source. So, you know, that's the feedback that we're getting on our side of it. And we know that we can do better.
Oh, yeah. That's not even the question. So, and the only benefit, though, if you have an older workforce, the composite rate, what does it average out to? It basically says everyone's 41 or 42 years old.
Yeah, that's like the break even. If your average employee is over that age, then, you end up on top. You save a little bit of money.
They're charging the 20-year-old the same they are as the 65-year-old. It's all just blended together. So if you have a young group, doesn't make a ton of sense usually. Older group makes a lot of sense. So that's where you're like, all right, this is for the benefits. You should go jump in there. It makes sense.
So census on small group is based off of what? It's like it's age,
zip code,
gender.
Yeah.
And
that's
it.
That's all
it. Yeah.
pricing.
Those are the
is based off
demographics.
of,
That's
so
how
a
hard it is to
younger
get a quote.
workforce. So a younger workforce can benefit from small group rate.
Big time.
Yeah.
Big time. Yeah. And that's where we jumped in. We were like, yeah, the composite rate's cool, but we had so many young people that it was like, this wasn't making sense on top of a lot of other factors.
Yeah, that's right.
But, you know, it was what it was.
Yeah.
So there's a lot of other things, I think, when we talk about benefits, like from an HR perspective or someone who's handling HR, right? Like having a good payroll platform to them matters. They're dealing with time off requests. They're dealing with, employee files. They're dealing with all these different, things that an HR person does.
I hate payroll so much.
Yeah. But it's a necessary part of the business, right?
Yeah.
So this is where we talk about some of our partners like Paylocity or Heartland, where we think they do a great job, right? And they're really tech efficient. They're really tech forward, and they're easy to work with from an employee side and from the HR consulting side. Mm-hmm. And then you throw in how we basically work with those platforms, like describe that and how it benefits, the employee and the HR and owners' lives.
Yeah, it really, since the systems integrate, and it's something that we've really tried to focus on, is that our main benefits platform works with these payroll providers. So when they're able to, have the information communicate from payroll system to benefits administrator to then get back to the HR, it's all flowing, and it's really easy for the employee to plug in their information. And then the deductions on the employer side are just seamless into the system. Mm-hmm. So you're not back and forth reconciling all of these different numbers where it's just A to B to C okay, it's taken out of the employee's paycheck. And that's super streamlined, and it just makes everyone's life easier.
So much easier. And also fail safe.
Yeah.
We saw in our move, because we weren't doing that, there was a lot of miscalculation of what contribution was, what's supposed to come out of checks.
Correct.
Not an ideal place to be.
No, the rates are in the system. The contributions from the employer are in the system. So it's all being calculated by the computer, which is 10 times smarter than all of us.
So easy. Employee goes in, they put in their information, they enroll. Next year, it's all in there. Make sure it's correct. Next year, it's just rinse and repeat. Becomes really simple.
It's a little bit, I don't even want to say it's more time intensive up front, because it's still quicker than paper enrollments.
Yeah.
But second, third year enrollment is just so easy. Yeah. If it's all the same, okay, great. You sign maybe once more, and you're done. So that's a huge benefit, is where maybe we just have to
and then
plug in the
hiring,
info.
firing too becomes something that has been an issue, where it's like, hey, I forgot to tell you I hired this person. They should have been on benefits a month
60
ago.
60 days ago.
And you're like, okay. That means I have to fudge a piece of paper, or hopefully someone goes, yeah, that's cool.
Right.
So also tell us how that works.
Yeah, so any hire or termination is going to automatically pop into our system. So it's going to email me. It's going to show up in the system. I can say, hey, is this correct? And just notify the employer. They tell me yes. We send out the enrollment paperwork, online paperwork.
Yep.
And it all gets done, from the employee's email, easy peasy.
And then termination is important, because COBRA,
right,
administration is a really important part of that. That is also automated.
Correct.
Hey, we terminated somebody. They're going to get automatically sent the COBRA paperwork.
Yeah, if the group is under 25 employees, we send out the termination paperwork. The carrier is going to do all of that COBRA processing for us. If they're over 25 employees, then we have it integrated with the COBRA processing, to where that's going to get the automatic alert, send them the enrollment for COBRA, and they're done.
Again, still a lot of agencies are not doing the automation. So you can miss, and if you miss, it becomes a real problem. HR people know this, they know what the consequences of it are, but it's a really important part of our business that we really want to be fail-safe, important to us.
And really, to that aspect, that's probably saving us time. Is just having
we pay the fees. We don't even worry about it. Yeah,
it's efficient for everyone.
Yeah, absolutely. And as far as okay, we talked about some rates. We talked about how the benefits of all that stuff works. What are things to expect from an employer side for what we can actually, if they're going day to day doing all this stuff? What are we doing for them that you think they're normally doing themselves?
Yeah, it's really a lot of that enrollment paperwork, is that they're having their employees essentially do that themselves, and they're walking them through some of the coverages, some of the details where maybe they don't quite understand it fully, and then that's confusing for them and the employee. So if we can loop in and be the direct point of contact, it's just a lot more helpful. Just as a side note, I had some health concerns of myself over the past few years, so it is something that I take personally to make sure that people are understanding what they're getting into. So if a certain event happens, I can expect to pay this, or if this happens, I know my prescription cost will be this. So we really just want to be educating the people. And if we can use our efficiency on the technology side to spend more time with the person one-on-one, I think that's a huge benefit.
Yeah, when we went through everything with my son, you and I were in constant contact then, just about max out of pocket, and what specialist visits were going to cost and all of those things. And you were immensely helpful in that. And I know that's the same role that you play, not just for me, as a client, so to speak, of Greyhawk benefits, but also, just that's what you do for everybody. In order to walk them through it, which is absolutely wonderful.
Yeah. And, you've been really knowledgeable because you're doing it. You seem to find what's going on, which is how it should be. What are you seeing in the market right now? Because there's been some changes in the sense of hey, new carrier kind of entered the small group world, and who's hot in HMO? What's a good setup right now? So give us a market update for what you're seeing out there and what employers should be kind of pinpointing on what could be for them.
Yeah, it's an interesting time in the market right now, because there are a couple who are trying to become more competitive in the space. So it's your HealthNet and UHC, and really those are the main players right now that are trying to earn business. So when we're quoting this renewal, we're seeing them be 10 to 15% more cost effective than the rest. So it's an opportunity for employees to switch over, or potentially, use a CalChoice program to where they can base their contributions off of HealthNet or UHC, United Healthcare, and then offer employees your Anthem, your Kaiser, all of those major carriers wrapped up within the CalChoice network.
Yeah.
Meanwhile, you're paying off of that, lower health net cost.
You offset so many years of increases with a 10 or 15% decrease, you know, so we went to that model. We're like, all right, we'll offer the HMO. It's still really solid if people take it. And that meant everything came down in cost for us, which is I mean, nothing's going down right now.
Sure.
So that was a huge benefit to us. Everybody should be looking for that setup right now.
Yeah. In some cases, it's cheaper than last year's premium, which is just crazy. You're thinking
crazy
that they're getting a 12% increase. Well, it's cheaper than what we were paying before.
Yeah.
Crazy.
Which is just fantastic.
Yeah, it's awesome. And then Cigna has entered the small group space, which was not a thing previously.
Yeah,
not in a big way.
Correct. We're still trying to figure out what territories they're really wanting to be operating in, but it seems like they're looking to enter the market on the small group side in California, whereas previously they've only done large group in California. Right. So interesting just to see how that all shakes out and where specifically they'll be in the LA territory. But yeah, something to keep an eye out on.
And then on the large group space, obviously we have some of those. Those are a little bit more complex. That has its own, you know, the composite rating. There's a little bit more to be done there. We love that space. We make good money in that space. Same resources. But then we're also playing in the captive space, where we're really starting to offer that to our clients and go, hey, you should think about a cap. So captive, it's self-insurance for health insurance, which is such a cool concept. It's been around for a while, but because of the cost increases, it's kind of becoming more and more tangible to go, hey, I have 100 employees. I fit this model. I should check out what it's like to be a part owner in an insurance company and try and get some of those benefits back.
Yeah, if you're on the large group side, I think it's definitely worth pursuing. And we can work with our carriers to see what would make sense based on your last 3 to 4 years of claims experience. That way we can predict if you are going to be saving money, what that's going to look like. If you have a terrible year and there's just a ton of claims, what does that look like? You know, you're paying maybe 10 to 20% more that year. But any given good year, you're earning back
so much.
Yeah, just a ton of money. So based on the group and their health, I think it can make a lot of sense.
As soon as Greyhawk's at 100, we're jumping in. It makes perfect sense. The insurance companies know what they're doing. They win. So if you have one bad year out of 5, that is perfectly okay. You can make it. Yep. So that's where the model makes a lot of sense. And I want to be a part owner of an insurance company. You know, it's cool. It's really cool.
Wes, talk a little bit about what we've stumbled upon recently with Covered California. When Obamacare launched, we didn't really realize that on the group side, people could go direct and then not have any representation. Can you talk about that and what we've seen?
Yeah, it's been tough. We've been put in contact with a couple of those groups where they're just kind of lost, and it's hard to essentially administer all of those benefits by yourself. If you don't really know like how the heck the whole system works, you're scrambling for answers, don't really know where to go, and then you're left in this place where you're just hoping that the coverage is in place and like things are done well. So it's scary. Like it's just confusing. So really, if we can be of assistance to those people, that's great too. Yeah.
And then, I mean, that plays also into the HR director side. And you mentioned this in the beginning that like, they're not insurance professionals and they shouldn't be expected to be. We're not looking to replace anybody or take anybody's job. We really just want to come alongside them and make their lives easier, because they're faced with a lot of questions sometimes about their benefits, and they're like, ugh, I don't know. How do you work with HR directors? I know that there's plenty of our clients that have them on staff. How have you been a benefit to them? What does that look like?
Yeah, day to day with the HR coordinators, it's a lot of making sure the payroll is correctly done. They're usually the person that handles that. I got a text from one of my clients today who just asking me a simple question. So however I can be a resource to them, it's really just trying to take stuff off of their plate and really make sure that they're focusing their time on how they can create a successful culture, take care of their employees. Meanwhile, we're that back-end support for them so that, if they want to be the point person for their employees, we're just getting them the information. Or if they want us to handle it A to Z, we're happy to do that too. Sure. Like you said, we're not looking to take anyone's job, but really how can we help them get to where they want to be?
Yeah, I think part of it too is we're really confident that we're going to give right answers. So it's like, we can partner with you. We're not scared of it. So if you're cool with it as an HR person, take it. And if you're like, no, I'd rather run point, make sure, that's fine. We will work with it. Sure. But more efficient to just let us run with it, especially since what we do.
Yeah, it's usually easier. We can tell you exactly what the deductions are to come out of the paycheck.
Yep.
So 2024, things are coming up. People should be looking at their, I think a CalChoice option with HealthNet. What else should they be considering? What's the long-term picture? Like, what are we seeing in the marketplace that employers should be aware of?
Yeah, I think, with inflation, we're going to continue to see larger than expected increases. So pretty standard to see a 12% increase on your renewal this year. I would imagine that'll be the case for next year. I think something to consider that we haven't touched on is probably just your ancillary benefits, to where it's dental and vision are kind of the simple ones.
Yeah.
Every employer can be offering those on a voluntary basis, to where they don't have to pay for them, and the employee can just choose to elect to pay for them if they'd like to. If the employer wants to be generous and cover them, great, that's awesome.
And they're not that much money, truthfully.
No, really, it's pretty inexpensive. So, but then you look past that, and we just introduced a group life that is when we're covering some form of life insurance for all of our employees. They can then take additional should they want to. So there's just these other items to consider if you really wanted to create, I don't know, this culture of, what would you call it?
Yeah, I mean, we're just culture of like generosity and giving, and like where there's a lot of things offered to the employees.
Yeah, and you kind of weave them into the
fabric
into
of
the company. Yeah.
Mm-hmm.
Yep.
So I think it's a huge benefit of just some other things to consider that we've been talking about with our clients as well.
Yeah, and there's so many ancillary. It's almost like its own thing to go down.
It's
But
a lot.
there's the Aflacs, there's the vision, dental, there's life, there's disability, there's there's
long-term,
legal,
short-term.
legal help, there's
Yeah.
pet insurance.
Yeah.
Like there's all kinds of stuff you can go down the road of. But to a certain degree, if like the more you want to offer, that's great. We talked about that earlier, and there's a lot of those things that can help offset. And again, there's tax advantage to doing that kind of stuff. I do think because of that inflation, like I talked about, looking at alternative ways to handle health insurance is going to be more and more prevalent, which is why the medical stop loss is taking off. But Wes, thanks for coming on the podcast, man. Like, I know we say thank you a lot, and I also give you crap all the time, but it's really cool to have you here. We're looking forward to big things. The health insurance side of the business is booming, and it's because of you, and we're really excited about that. So thanks for coming, man.
Yeah, thanks for having me. Appreciate
y'all,
you guys.
hope you enjoyed that. It's another good episode from the Risky Assets podcast, and we'll see you soon. Take care.